Again, this week, not much has changed with the stock market. The plan still remains the same as long as this breakout holds, which it did during this move into the half cycle low. Then you can stay long stocks in your 401ks, whatever. Again, this is not my preferred area to invest in because I don't think the percentage moves are going to be huge. I think you're going to make a lot more money in the metals and specifically in silver over the coming weeks. But if your only option is the stock market, then there's no reason to get trigger happy and sell unless this breakout fails. Now, it seems pretty clear the Fed's going to continue to pump liquidity into the stock market to keep this pumped up into the elections. That's going to mean that we're going to have a cycle that's going to probably run 42 or 3 days before it tops. But this first daily cycle was short at only, I think, 23 days here. So that does set this up for a long cycle, a stretched cycle. So even though we're getting kind of late in this daily cycle, I seriously doubt that we're going to get a daily cycle low ahead of the elections. I think they're going to keep pumping liquidity, and we're probably going to end up with a stretch cycle and probably not anything that tops until the election or after the election. All right, moving on to oil. Again, it's clear in my mind anyway that we've got an intermediate cycle low here. This is the first daily cycle. Just if we require the first daily cycle low to break the trend line, then this may be a pretty sharp decline when it occurs, which kind of goes along with my expectation that oil is just going to be stuck, mostly going sideways. It's going to be difficult to trade. It's probably going to be something that looks like this, kind of maybe a mirror image of this mess over here, which means it's going to be really hard to trade, and it's already starting to do that after a pretty powerful move off of this half cycle low. Then we get this big bearish engulfing candle. It makes it really hard to hold on to your position if you're long, and then the next day the day starts off with follow through to the downside. Again, makes it if you're trying to trade this in real time and not just looking at the closes, even if you're just looking at the close, this is going to be hard to trade. So and I'll say a word about options. I see people wanting to trade options in everything. If they think there's a trade in oil, they're going to take an option trade. If they think there's a trade in Bitcoin, they're going to take an option trade, in uranium or so forth and so on. Options really only work during trending moves. Otherwise, they turn into really short-term vehicles where you hold on to them for 1, 2, 3 days, and then you got to get out and try and avoid these big swings where you lose all of your gains. In erratic sideways markets, options favor the option writers. As the volatility back and forth, you just end up losing all of your time and volatility value because the market is not trending. It's not really going anywhere. At least it's not going anywhere fast. And so I would caution people about trying to trade options in anything that you think is, in our case, going up, which I think oil is going up. I think it's going to make higher highs above this pivot here, but it may just be such an erratic pattern that it's almost impossible to trade. I mean, we could come back down, maybe drop below this pivot, come back up and make a higher high, but then immediately turn back around and get our daily cycle low that comes down and breaks this trend line. So I'm not a big fan of trying to trade oil right now. I think it's going to be extremely difficult to make any money. And if you're trying to do it in options, I think you're probably going to lose money. Moving on to uranium, kind of the same story. It's all part of the energy complex. So if oil is going to be erratic, uranium might be erratic as well. So again, probably not a sector where you want to be trying to trade options. don't think you're going to get a strong trending move. Nothing like what we had over here. I think we're going to be stuck going mostly sideways for could be another 6 months to a year. Something that looks more like this than like this, and options just aren't going to work unless we get something that looks like this, and I don't think we're going to. So pretty sure we got an intermediate cycle low. Not at all sure that this is going to be easy to trade, and that we're gonna get some kind of a trending move that could come, maybe break out and come up and test this pivot here. Not sure that we're looking at something like that. And if we do, it could be difficult to time. And by that I mean we could churn here below this pivot. We could churn and churn and churn, and then you get a breakout, and in 2 or 3 days you get up here to test this pivot. Well, if you're not already in before the breakout, then you miss the move. And if you get a lot of churn, then you're going to be nervous and trigger happy, and you might be tempted to sell immediately on the breakout, which could be the right move. If we just get a breakout and then back down we go, then that would be the right move. I'm not at all sure that we're going to get a run to here. I'm not at all positive that it's going to be a strong trending move to there. And trying to trade that is going to be difficult. So, take it for what it is. I think we got an intermediate cycle low. Not at all positive that this is going to be easy to trade. Bitcoin doing exactly what I've been predicting it's going to do. It's just a sideways, back and forth mess, a market that you've got to, in order to make any money, you got to pick the bottoms and you got to pick the tops. And for 99% of us, that's going to be pretty damn hard to do. And I think we probably got at least 3 to 6 months before this could be ready to actually break out and trend. So, the same as all the other markets. Difficult to trade, not something you want to be trying to trade options, I don't think. All right, moving on to the metals. This is where I think our big potential is going to be, but I don't think it's going to be in the mining stocks. I don't think this pattern that we've got right here is going to change. We're in a bull market and we're moving up, but I think this is where the cartel is going to concentrate most of their firepower from now on. And anytime we get any kind of a pullback in the metals, no matter how shallow it is, I think they're going to hit the miners hard. So it's kind of like Bitcoin. Even though this is trending up, trying to trade this is difficult. You get these, like every one of these sell-offs triggered a decent increase in the cancellation index because they're scary. And, most of these retail traders have bought into this fantasy that, they're going to pick the next NVIDIA in the gold mining stocks. There may be 1 or 2 penny stocks that have a 10,000% increase, but your odds of picking that are pretty small, and you certainly can't put your whole portfolio in it. So if you want to get leveraged returns in the metals, I think you got to use leverage. The safest way to do that is in the leaps. You can take leaps in GDX, but I suspect that this is going to continue to be difficult. Every single resistance point is going to be hit with selling. So we saw this resistance, hit with selling there. We get a small breakout, no follow through, big attack. Then we get close to this pivot and we get another big sell off. We get a little bit closer and another big sell off. We finally get up to this resistance level, another sell off. I suspect, we've got a daily cycle low, so we'll probably get a rally. But I suspect there's going to be, maybe we can get to this pivot here before we turn back down again. But, we could also just come up a little bit short. You know how this works. When you get close to these resistance zones, traders that have been in early will start to take profits just to guard against stuff like this, where, you come up a little bit short and then the selling comes in. So here's our next resistance zone here, right at about 43. Let's call it 43.50ish. We could get up here to 42.50, and traders start to get nervous and they take profits, and then you get another big correction. So I don't think you're going to get. I don't think it's going to be easy money in the miners. All right, silver I think is probably where we're going to make our easy money, where our leverage will work. And yes, we have resistance zones in silver, but if the cartel continues to try and block silver, then they're gonna create a short squeeze just like they did with gold at 25.50. It took either 14 or 15 attempts to break through that, but when it did, it caught the cartel with a bunch of shorts, and they just got themselves caught in a short squeeze. Same thing could be setting up here in silver. If they try to block this breakout, they're not going to succeed, and if they do, they're just going to get themselves caught in another short squeeze. So I think we're going to go. I think we're going to go through this pivot, and I think minimum we're probably going to get to this pivot, and we could get up here to the 44 zone, this upper pivot, if the banking cartel is dumb enough to get caught in another short squeeze, trying to keep silver suppressed. So this is a weekly chart. We are setting up for the ballistic phase. That phase is going to start once we get a breakout here. Let me go back to the daily chart here for just a second. All right, so we've got our top here of the last intermediate cycle, which was at, let's just call it 32.75, and then we tested it again, then we tested it here, and then we had a test here, and knocked it down again. But and I'm pretty sure this is a move down into a daily cycle low, but it only lasted 3 days, so very mild. And we're going to get a fifth test. If they block it again on the fifth test, then that's the setup where the short squeeze could develop. In my opinion, the banking cartel needs to get the hell out of the way of silver, because this is setting up for a ballistic move. And now let me go back to the weekly chart and show you what I'm looking for. And this is going to tell us that we're getting towards the end of our intermediate rally. And I still think the T1 pattern in gold is valid, which means we're probably going to go to 28.50, maybe even as high as 29 before this is over. But we want to see that ballistic move in silver, and that would be our clue that we're in the last couple of weeks of the intermediate rally. All right, this is what I think is brewing. So here's our resistance in silver back in 2020, and then when we broke out above that, it started this ballistic move into the intermediate top. And you can see that this is a weekly chart, and let me zoom in a little bit here. You can see you get these three really huge weekly candles, like 7 to 10% moves in a week. That's what I think is coming for silver here when we finally break through this resistance zone here at 32. What did I say? It was about 32.75. Once we break through that and hold, we may even just get a out of the blue day where we break through it, and it's not even a tentative breakthrough. I mean, it is a big breakthrough. And if that happens, then anybody that's not already in is going to be shell-shocked, so to speak, and most retail traders will not be able to buy because we'll immediately go into a heavily overbought condition. But if you're starting a ballistic move, then overbought just gets embedded in the overbought condition, and there is no pullback to buy. You just get left behind. So that is the risk, in my opinion, is that if you're waiting for a breakout, that it could come as an out of the blue type day, a 5 to 7% up day, where the shorts just get torched, and the short squeeze is on, and then anybody that wasn't already in, they're in a panic. They don't know what to do. They can't pull the trigger because it's overbought. And then smart money that understands what happens starts immediately pulling the trigger and getting in. They're not worried about a pullback. They're worried about missing the ballistic move. And so if you get a ton of traders worried about missing the ballistic move, then you don't get a pullback. And price just shoots straight up, and you get that 2 or 3 weeks of really big weekly moves. So this is where I think our big money is going to be made, is in silver when this breakout occurs, and it could occur as a out of the blue day, maybe sometime next week. We've got a nice reversal candle off the 10-week moving average, as I've been saying over and over. Too early for an intermediate top. Silver was only on week silver was only on week 9. This is only week 9. That's too early for an intermediate top. I think we've probably got 3 to 4 more weeks, like into the election, I think, before this is over. And I am convinced we've got to have a ballistic phase before the intermediate cycle tops. So this is where I think you should be. I think the vast majority of people should play this safe with the leaps. If silver goes to $40, your leaps are going to probably tack on 100%, maybe a little more. If you want to take a little bit of money, so let's say you got 80% in physical, you got 20% that you're allocating towards leaps, or maybe let's say you got 15% for leaps. You're saving 5% to do short-term trades via DG's short-term signals. If you want to maybe take 12% and put in leaps, and maybe take 3% and play a more risky strategy, I think you could take November is really risky, but let me check and make sure there's December options for SLV. There are quarterly options that expire on December 31st for SLV. That would be, as I was saying, November options are really risky. Even though I think this move is going to occur in the next 4 weeks, trying to trade, unless you're just willing to lose that 3%, I would not really advise trying the November options. Now, maybe you could take the November weekly options that expire at the end of November. That might be acceptable if you're just going to trade 2 or 3% of your trading capital in this. But if you want to try and goose returns, you could do that. But you could take maybe the November weekly options, or better still would be the quarterlies in December. Just give you more time. But if we get that ballistic move, it should occur here in the next 4 weeks. And so I'm comfortable giving you permission to put a little bit of your capital, of your trading capital, into some shorter term options, something that has the potential to maybe produce a 200 or 300% win instead of, like I said, in the leaps, you probably have the potential to do maybe about 100% or a little more if silver goes to $40. If you're trading the weekly Novembers or the December quarterlies, you've got potential to do 200 or 300%. So you can put a little money in there if you want to. Not too much, 2 or 3% of your trading capital max, and be prepared for some volatility. All right, so that's the game plan. I strongly advise most of you or all of you to stick mostly with the leaps. It's just safer. If something goes wrong, if the cartel gets control of the metals again, which I think is unlikely, but if they do, the leaps will save your ass, and you'll have plenty of time to recover. But I do think we're going to have a ballistic phase. The silver is going to go to 37, 40, maybe even as much as $43 in a very strong breakout move. Once we get above this, I think it's going to do it over the next 3 to 4 weeks. So you've got my blessing to take a few more risky call options with maybe 2 or 3% max of your trading portfolio. Whatever you are comfortable losing all of that if it doesn't pan out. If you're not comfortable losing, then stick with the leaps and stick with a smaller potential profit. I mean, seriously, 100 to 120% is still pretty damn good profit in 3 to 4 weeks. If you can't be happy with that, then you need to get out of this business and start counting cards at the casino or something. All right, so that's it for the week. Everything looks good. I'm pretty sure we got a daily cycle low in metals, and we should be setting up for probably the last daily cycle advance in the metals. I think that's where the big money is going to be made, where the easy money is going to be made. I do think stocks are probably going to continue higher into the election, but I don't think you're going to get nearly the percentage gain in stocks that you will in metals. And I think Bitcoin, uranium, and energy are going to be difficult, are going to continue to be difficult areas to trade.